Hello and welcome. So in this video, I wanted to take the time to look into the housing market and see just what damage the pandemic has caused in 2020, as well as look at what the future might be like in 2021. So I'm a homeowner myself, so I like to keep an eye on these things just to make sure, that I can assure my cats they'll have a roof over their heads for the next year. So starting off, let's take a look at the top 5 conditions that cause a real estate market crash. Number 1 is an asset bubble burst. So the national average home price hit a record high of $212,000 in January of 2020, and that's only gone up since then. This was already 15% higher than the July 2006 record high of $184,000. This is a telling sign of a bubble growing. The second factor is increase in unregulated mortgage brokers. Looking at this, 5 of the 10 largest mortgage lenders are not banks. This means that they are not as regulated, leaving them and their customers more vulnerable to a crash. The third warning sign of a potential crash is rising interest rates. This one's pretty straightforward. If it costs too much to take out a loan or make a payment, there's no new homeowners. The opposite of this is actually happening right now, though, so we're pretty good on that one. The fourth sign is an inverted yield curve. This one's a little bit technical, but this is basically where the interest rates for short-term treasuries become higher than long-term yields. Normally, short-term yields have a lower rate because an investor doesn't require as high of a return on their investment for these smaller terms, especially less than a year. When this curve inverts, it means investors think the short term is riskier than the long term, which is not a good thing and not usually the case. And this is not the case right now. So we can kind of check that one off the list as well. And finally, number 5 is changes in the tax code. Whenever Congress makes a change to the tax code, the housing market has to respond. This might throw some uncertainty in the air if Biden changes tax laws under his administration. So we don't really know exactly for that one quite yet. All right, now that we have all those 5 points established, let's look at how the market is actually doing right now. So despite the ongoing pandemic, the housing market has been doing quite well this year. The sudden wave of relocations, many people converting to remote work, and record low mortgage rates are all contributing to this kind of chaotic real estate year that we've had. I personally own a moving company, and we have seen this in a big way, especially with long distance moves. We've performed more than twice as many of these this year versus last year, despite being in a pandemic. In fact, just to plug this real quick, if you need moving or storage in Arizona or the Los Angeles, California area, give us a call at Skinnywhip Moving. So back to mortgage rates. Treasury yield rates are currently at an all-time low of just 1.66% for 30-year fixed rate loans. That is crazy low. And also, this is enticing for many first-time home buyers who are, of course, jumping at the lower rates and smaller payments. Daryl Fairweather, chief economist of Redfin, he sees 2021 bringing in more home sales than any year since 2006, with annual sales growth increasing from 5% in 2020 to over 10% in 2021. So he predicts by the end of the year, the home ownership rate will rise above 69% for the first time since 2005. I actually have some anecdotal evidence for this as well. I'm good friends with several real estate agents who, against all odds, had their best years yet in 2020 during a pandemic. Like, all of them had amazing years in 2020. So the increased time spent at home through remote work has also caused many people to seek out new homes with more space or specific features to kind of align with that lifestyle, putting even more pressure on the market. Those searching for more space are going to be pretty excited to hear that new single-family housing will rise 9% next year. So this is a much-needed boost, as it is estimated that there was a shortfall of 4 million homes heading into 2021. So there's an incredibly low inventory right now with less than 500,000 homes for sale and mortgage rates at 50-year lows. So that being said, the LendingTree chief economist feels that lending standards are likely to tighten further as the end of forbearance and foreclosure moratoriums are kind of a wild card right now. And then the rent crisis is another wild card that we're dealing with and could bleed into the owner-occupied market via adding supply or affecting the financial markets. And of course, this all depends on COVID-19 restrictions and what those will look like moving forward. If we find more restrictions in place, construction on new homes will drop again, and we'll have even more pressure on the market. All the relocations and selling homes are starting to add up to a problem, and then add on top of that, looming moratorium end dates doesn't help the problem whatsoever either. Here we can look at this infographic that depicts how the seller's market will remain strong into the later months of 2021. Jared Kessler, the CEO of EasyKnox, predicts that as companies allow employees to permanently work remotely, that high-tax cities will see a talent drain with people relocating to cities with a lower cost of living. We're already seeing this happening in many areas. Second-tier cities like Austin, Charlotte, and Tampa will experience a residential building boom because of this. I mean, we're already seeing some pretty big names head to Austin already. So as long as the economy can keep up with the rising prices, we can hopefully avoid the bubble bursting. And of course, the biggest looming issue must still be addressed, and that is the eviction bans. If these bans are lifted at once with no relief funds for both landlords and renters, the market will surely have a very hard time stabilizing. Millions of properties would drop in value overnight as millions of renters and owners are kicked from their homes and their properties. The good news here is we have some relief coming through the latest stimulus bill. However, this isn't going to last forever. Then on top of these problems, we have a bunch of overpriced properties with no one able to afford them or rent them. This is with the exception of people who are relocating from expensive areas, selling their expensive home, and then moving to a less expensive area, and also driving up the prices in those less expensive areas. So it's kind of a vicious cycle that we find ourselves in right at the verge of 2021. And of course, this brings us into just another year of uncertainty. So if the nation can begin importing supplies properly again, getting supply chains in place again, construction can continue as planned, and the economy continues to grow, we can stave off this bubble for a while and keep the market under control. But again, there's many wildcards here that have experts ranging their opinions from expected good numbers to looming bubble crashes. So that's going to do it for today. I hope you enjoyed this video. Make sure to like and subscribe if you enjoyed this breakdown. And of course, have a profitable day.